Licensed producers are required to navigate a specific set of continuing education rules to maintain their professional standing, starting with the standard national requirement of 24 hours of approved coursework every biennial renewal period. This 2-year cycle is a fundamental concept on the insurance exam, where you will be expected to identify the frequency and volume of credits needed to avoid a license lapse. A critical subset of these hours is the mandatory ethics requirement, which almost always accounts for 3 of those 24 total hours. On the exam, you will frequently encounter questions designed to trip you up on these specific numbers and timeframes. They might suggest that a producer only needs 12 hours annually, or that they can carry over an unlimited number of excess hours into the next period. In reality, most jurisdictions do not allow for the carryover of credits, and you must earn your hours within the specific window assigned to your license cycle. Think of the mnemonic 24 for the core and 3 for the tree of ethics to help you lock in these numbers. This means 24 total credits with 3 rooted in ethics are necessary to keep your professional standing. The biennial period usually ends on the last day of the producer's birth month every 2 years, which is another detail examiners love to use in math-based scenario questions. For example, if you were licensed in an even-numbered year, your renewal will consistently fall in even-numbered years. When you are sitting for the exam, you will see scenarios involving a producer named Sarah or John who has completed 20 hours of training. The question will ask how many more hours they need to satisfy the state requirement for license renewal, and you must instantly look for the total of 24. If the question mentions that Sarah has completed 24 hours, but none of them were in ethics, you must identify that she is still non-compliant because the 3-hour ethics requirement is a hard floor that cannot be substituted with general credits. This is a primary focal point for examiners because it underscores the importance of professional conduct and consumer protection in the insurance industry. Beyond the standard credits, you must also be aware of special training requirements for specific products that carry higher consumer risk or federal oversight. For example, any producer wishing to sell annuities must first complete a one-time 4-hour annuity suitability training course. If you see a question asking if a producer can sell an annuity immediately after receiving their life license, the answer is usually no, unless they have completed this specific supplemental training. This is designed to ensure that producers understand the complex nature of annuity products before making recommendations to consumers. Similarly, selling long-term care insurance requires an initial 8-hour certification, followed by ongoing 4-hour refresher courses in every subsequent renewal period. This is a common trap on the test, where they might ask if standard life insurance credits cover long-term care requirements, and the answer is that long-term care requires its own distinct certification path. Even though this is a life insurance-focused exam, you may occasionally see references to flood insurance training requirements as part of a general knowledge question about continuing education. In those cases, remember that producers who sell through the National Flood Insurance Program must complete a one-time 3-hour course, which illustrates the broader principle that specialized products require specialized knowledge. The exam also focuses on the consequence of noncompliance. If a producer fails to meet their requirements by the expiration date of their license, the license typically becomes inactive or lapses. You cannot simply pay a late fee and continue selling while your credits are missing. There is usually a grace period for reinstatement, but you are strictly prohibited from transacting insurance business while the license is in a lapsed status. Trick questions often focus on whether a producer can receive commissions for business written while their license was expired, and the answer is a firm no. You must also distinguish between the education provider's role and your own. While the provider reports the hours, the producer holds the ultimate responsibility. If the credits do not show up in the state system, the producer is the one who faces the penalty, not the school. Every licensee must proactively verify their transcript because the state will hold the individual accountable for any deficiencies, regardless of clerical errors by the education provider. Maintaining your license is not a passive process, but an active requirement of the professional producer.